friends, welcome back for Bitcoin Technical Analysis. I'm Rocky Outcrop. Let's take a look at the Bitcoin charts together, shall we? Thank you so much for joining me here today. I would really appreciate it if you hit that subscribe button. I really would. So that's enough of that, though. I'll not go on and on about it. You've seen YouTube before, after all. Well, I mean it. Okay, so June the 17th today. Sometimes it's just a lot of sideways trend or trendless. Now, before we get into the sort of nitty-gritty of the episode, I want to throw out a reminder to people. As you can see, it's down at the bottom of the notes here, and I'll be coming back to this at the end just to remind folk again, that in markets like this, it's worth reminding folk of the need for risk management, perhaps even more than in trending markets. And what do I mean by that? Well, in a bullish market, you can be kind of like a stupid bull and still make money, and in a bearish market, you can be kind of a stupid bear and still make money, etc., etc. So, in a sideways market, then you could be anticipating the trend continuing. For instance, the current trend, the prior trend that we're looking at is an upward one. So you could be thinking, well, the trend will go up at some point and then still, though, just be kind of shorting it between certain levels and get caught out of position. Or indeed, you could be thinking the trend will continue and putting in little longs here and there between certain positions. And actually the sideways could just be a precursor to the trend turning around and actually turning into a bearish one and that sort of a thing. So, risk management becomes that little bit more important than perhaps it otherwise would be. Although, really, as the Rocky Outcropticians out there, we know that trading essentially is risk management as opposed to predicting the future anyway. So to us, in a sense, that's a moot point, but you might just be new here to the channel and whatever. Cool. So I wanted to find a quote about sideways action and stuff like that, just to stick it on there. So I spent literally 10 seconds of my life looking for a quote, and I didn't find one straight away, which was kind of disappointing. Let me just have another look here. Sideways, there's one in here. This is what brought me to this website in the first place. Trading is a waiting game. You sit, you wait, you make a lot of money all at once. Profits come in bunches. The trick when going sideways between home runs is not to lose too much in between. And I think that's kind of what I was getting at right there. But that quote's kind of crap. Instead, my favorite quote from any trading comes from my mama. Because my mama used to always say that trading is like a box of chocolates. And you never know what you're going to get. She said that what she used to do was open up boxes of chocolates and take out the little, the legend, the key that shows you the different chocolate shapes and wrappers and what's inside them, and burn it, and then sit there and eat the chocolates in front of us, just laughing at us as whatever. I don't even know what I'm talking about. Let's go back over here to the markets. Yeah, that was a Forrest Gump quote, and whatever, who cares? Trading is kind of like a box of chocolates, though. You never know exactly what you're going to get, even with that little actual thing inside there that tells you what you're going to get. Funnily enough, because you can look towards all of the different technicals and everything else and still be caught out. Of course you can. Let's just get rid of all of the drawings right now and take a look at this concept of the trend in general. Well, you can see these lows here. They're all higher than the previous lows in a sense, right? And you can see these highs here. They're all higher than the previous highs in another sense, right? Okay, so you could say that we're on an upward trend. And you can look at the oscillators and you could say, well, hey, there's certain warning signs about this upward trend, when you can quite clearly see them all sort of trending towards the downside during this upward trending movement. So you could just kind of quite briefly say that there's that divergence there, which would be kind of part of what you might expect coming in at around a previous high, regardless of whether or not you actually end up turning around or just busting on through it, because there's going to be question marks in here. And as we come up here, the wacky races momentum will slightly slow down, as you come towards your previous sort of support line. So there's all of that, and that kind of, so you can look towards those things totally. And also, in terms of what we've been looking at recently, there's another couple of things you could look to. For instance, the shape of this rising wedge, for example, if you like, or indeed the shape of this symmetrical triangle, for example, if you like. And also the things that we've talked about in recent episodes, such as the positions of the 21 EMA, the 50, or that's actually the 10 simple there, that red dotted line. And of course, you can see here quite clearly on the CME chart that we're right between the two, sort of straddled between the two here of those moving averages. Little things like that might give you a wee clue as to how the price might go one way or the other. In the meantime, you can look towards these Fibonacci retracements like we've had on the charts, where we came down to the Goldie pockety zone just over here and then came back up again, and we're being sort of resisted at this 382 level. You could kind of make that case there at the minute, in and around this horizontal line, which you can also look to at the 9555 area, which kind of brings me back up to the sort of the main kind of thrust of all this technical analysis recently, which is here's your sort of levels and price targets and everything else written out here for you, easy to read format. And you can just go ahead and read that. You can pause the screen if you want to and read it or whatever. I'm not sure. I guess you can figure out. Science will prevail in the end, and you will figure out a way. So, there's no real divergences or anything to report just now. Kind of contradictory statement, that one, compared to what I was saying earlier on, but just kind of zooming on into this like price action just over here, and considering the fact that we're in a sideways trend, just there, and that there's this mess of is this a higher low? This is a higher low than over here, which is a lot higher than over here. So looking down here, is there any bullish divergence? No, not really. You could maybe make some sort of claim for class B hidden bullish divergence there, but there isn't. What about in terms of the tops here? And are we getting up higher or not? Well, this isn't actually higher than over here. This is higher than over here, and it's not divergent on the RSI, but it is on the stochastics, but it's not on the DMI. Blah blah. Okay, let's not split hairs too much over that one, and just kind of move on past it and say that sideways is as sideways does. Now looking towards support and resistance instead, and that's kind of something that I think is probably what we will be looking at. We Rocky Outcropticians, and we'll be looking at really instead over the next wee while. So examples like this sort of a chart here, where you can see quite clearly now, as you know, subscribers know I don't change these horizontal lines around willy-nilly. They've been on the chart for months and months and months. Last time I even looked at them and said anything about them was probably a week or two ago, and said they've been on the chart for months. And you can see we're right here between these two obvious lines of 9238 and 9562. You could say over here on the Bit Mexico chart, for instance. Those are something that you could look to yourself. And of course, we have our sort of levels written out here in the old English language writing there. So we can look at all that. You can also look at things like volume, moving averages, horizontals, so forth, to try and make decisions. Now, we've kind of covered all of them apart from the volume aspect of things. Breaking past these levels, at certain times with an uptake in volume, would be kind of good. As Dow, now I always make the joke where I say Mr. Dow Jones, because as if Dow is his first name, but I know that it was Charles Dow and Edward Jones, and that the two of them were lovers. No, okay, right, whatever. And they set up this thing together. Now, what Mr. Dow Jones said back in the day was that when the markets are going with a trend of some sort, then you expect to see expanding volume in the direction of that trend. So if the trend is a bear trend, then you'd hope to see the volume increasing as the prices go down. And likewise, if the trend's a bull trend, you'd hope to see increase in volume as the trend goes towards the upside. And just kind of looking at like how there was kind of increasing volume in this sort of kind of up until we started going sideways, at which point maybe if anything it's been slightly going down a bit. It's asking a couple of questions, just consolidating. But anyway, as you know, then you can look towards these things for other little ideas, and you can look towards these oscillators down below to see if they break out from the patterns that they're in at the minute in terms of making your decisions. But right, wrapping up here, just doing this episode in less than 10 minutes. Of course, there's not a huge amount of sort of drilling down on them. Okay, we'll spend the last minute. I'll do this here, then I'll spend the last actual minute kind of looking at the charts in a really sort of low down way. All right, okay, right. But reminder, in markets like this, it's always worth reminding folk that there's a greater need for risk management than perhaps in a trending market, where perhaps maybe the trend being your friend, you could ride that and avoid being washed out and all the rest of it, while you sort of take advantage of the trend itself. And that's kind of what it is to be a technical analyst in a sense. Right, enough of that crap. So I've reminded you twice about that. Let's kind of just go a little bit wild, shall we? Look down to the 1 hour trend, the 1 hour time. Look, we've got a lows, higher low here. We've just got a sort of a shape on the go here. Oh no, drawings are coming back on, but what have we got down here? But the old technical analysis, foggies. So we're in a bit of a symmetrical triangle just now. We're coming up towards the end point on this. Maybe we'll break out of that soon. Maybe, indeed, maybe that's actually a bit too sort of, maybe I'm being a bit too generous here with this one, and should be using just like making sure that we kind of have a bit more space here. Yeah, that looks actually a little bit better than it did before. So, we could be in this for another handful of hours before perhaps making a move one way or the other. The move off the back of this would only really take you up maybe just past our sort of horizontal support, resistance line, here on this one. or down perhaps to the upward sloping part of the overall sort of, on the daily time frame there, that rising wedge. Let's be even crazier. Let's go down to the 15-minute timeline. Wow, it's amazing. Well, it's not amazing because obviously I drew this on and whatnot, but it looks almost exactly the same in the 15 minutes to the 1 hour. Well, I mean, of course it would in that section, but yeah, not much point in doing anything here in terms of oscillators and whatnot, but you can see that perhaps you could make the argument that we're over bought in terms of the stochastics maybe in this oscillating price action. So maybe we're just going to continue within this in terms of 15-minute timeline by going back down to the 9438 area, having found resistance in about 9,500, an easy sort of low risk management short-term time frame 15-minute chart type. Easy to manage the risk in the sense that you could just immediately call yourself wrong should the prices go past sort of 9,520 and stop out again. Of that one, you could be looking at coming down from the 9,500 area to try and cash in at 9,440 in terms of sort of $60 odd move, I suppose. And that's just an example of what sort of thing you could be doing in and around these times. Looking at the 4-hour time frame. So if this is a downtrend, perhaps you've got this and this 4-hour lows here as being bullishly divergent. We did speak about this before on the bigger show, and maybe then we're looking for this to not come down and put in another low perhaps. A low, obviously there'll be a low along the way, another lower low I meant really. Perhaps maybe that would give us a sort of that would show us that the momentum's not really there necessarily for that, and that we could remain within this structure, or indeed at least remain as a higher low overall in terms of managing your risk as well. On that front, maybe we could look towards the 233 just simply in terms of managing risk. In terms of the fake out zone in this area. Who really cares though? You don't tune into this channel daily to see me look at the 15-minute timeline. You've got other channels for that. So I really just appreciate you tuning in really today, and I just wanted to give a little sort of example of how you could look at things kind of briefly, in a minute or two there at the end. And yeah, 12-minute episode. We've covered enough in today's one. I'm going to tune out now. Thanks so much for tuning in. I hope this here sounds okay, and yeah, cool. Thanks so much for tuning in. I'll catch you in the next episode. As always, do these every day, so tune in tomorrow for more and better. Always better, better every day, always better. Good stuff, great stuff. Thank you so much. Okay, catch you next time. I've been Rocky Outcrop. We've been Rocky Outcropticians. I'll see you tomorrow.